Hey guys, today we are going to talk about how to trade all-time highs. Why is that important? Well, these are the market conditions that we have been trading for the most part of 2024. Right? So for example, we saw Bitcoin breaking new all-time highs back in March. We saw gold recently break new all-time highs again. And we have the US indices, in particular, Nasdaq S&P, that are breaking new all-time highs for the most part of 2024. And one of our main jobs as traders is to be able to adapt to the market conditions that you are currently in. It's a complete different scenario if you're in a bearish market, if you're in a ranging market, if you're in a bull market, or if you're in a market that is even constantly breaking new all-time highs. And this is actually what keep improving your edge means in this particular case. Working on your edge, sometimes you have the misunderstanding that you need to develop a new trading strategy or completely change the way you trade. No. Improving or working on your edge is basically being able to understand where the market is, what type of opportunities the market is offering in a specific moment, and have the right expectations for the setups that you should be looking for. And in my opinion, I believe that we're going to carry on seeing new all-time highs being created this year. So stay with me and I'm going to explain in a simple way how you can take advantage or carry on taking advantage of these market conditions. So first, I'm going to explain what's the main difference between trading at all-time highs or not trading at all-time highs. Secondly, I'm going to explain 4 different type price movements that we usually see in a trend and what type of opportunities can we expect on each one of those phases, either if you are a buyer or a seller in this type of markets. Third, I'm going to explain what is the first trading opportunity that we have as soon as we break all-time highs. And fourth, we're going to look at the charts and see a few examples on Bitcoin, gold, and in the US indices, Nasdaq and S&P. Before we start, it would be really great if you could like and subscribe to the channel. I'm really trying to push to 1000 subs, so I would really appreciate if you could help me achieve that mark. So what's the main difference when you're trading at all-time highs versus when you're not trading at all-time highs? All right. So first and foremost, the main difference is that we don't have any data on the left side. Right? There's no historical data at the current price that we are trading in. And for us traders that mostly rely on price action to make decisions about the trades that you're about to take, it's a big lack of information that we have to help us make better decisions. Because anytime we are starting doing our analysis, especially in the higher time frame, the first thing that we need to understand is actually where price is in the bigger picture. And to do that, we need to look left. We need to understand if we are by any chance closer to important high, support resistance, and its supply level, whatever it may be, like that you are looking for in terms of price action. The only thing that we can do now is rely on what you can see in the moment. Right? And that's why we need to start being straight away a little bit more conservative on the way that we actually are going to trade these levels. Especially if you are a counter trend trader, this is not the moment to start trading every single double top that you see in the market, especially without any more clear confirmation that price about reverse. It's always risky. So this is my first tip. I always assume that when you are trading at all-time highs, that price wants to create one last all-time high, in this case an extra fake out before actually moving to the downside. So that definitely is one of the first differences that we have in here. Another important aspect of trading at all-time highs is actually to see when we do break the all-time highs, what price does afterwards. So in this case on Bitcoin, when we finally managed to break this all-time high in here or even in here, price didn't really sustain the momentum and continue to push to the upside. What price did instead was that actually fake out the level, created a new all-time high, but it didn't really manage to remain above the level. It actually come back into the previous structure, and now basically we are back below the all-time high. So in this particular case, it's basically just a fake out of the all-time high, opposite to what we actually had on the indices, for example, where price broke a new all-time high and it sustained to be above that level. And meanwhile, it has been moving much higher since then. Because what we're going to be talking next in the video, it's more about this scenario on US indices that we actually managed to sustain the bullish momentum and create new all-time highs on a regular basis. And this takes us into the second point of the video, which is to be aware of 4 different price movements that we can see in a trend and how should we trade each one of those specific moments. So we have momentum, compression, manipulation, and we have the reversal phase. Before I actually go into detail of each one of these 4 different phases, let me just explain in a simple way the way price moves. Like usually price goes up, down, creates another high, retraces, goes higher, retraces, and continues like that. And usually you should be expecting price to react from one of 2 levels when price is moving to the upside. So it's either the previous level of support resistance in this particular case, or it can be the demand zone actually, which is created at the previous wall. And when price is in the momentum phase, basically the retracement is not that deep, and price can either not even retrace back to the previous level of support resistance, maybe just reacts a little bit and continues to go high, or maybe the maximum there it goes is actually this previous level of support resistance in there. without really having deep retracements back to the demand zone. When price starts actually to have these deep retracements, that's the moment that it starts getting into more of a compression zone, which is actually price going up, retraces all the way back to the previous low, goes up again, breaks a new high, comes back into here again, and starts moving like that. So in this particular case, price at this point is starting to have deep retracements, which means that the sellers are starting to be a little bit more involved. Before that, it was literally just the buyers in control and managing to create new highs. In this particular case, the buyers are still managing to break new highs, but now it's much deeper retracement all the way back into the previous level of demand, which means that slowly price is starting to show some weakness in here. And then this eventually takes us into the manipulation phase, which is a little bit more in a ranging market. All of a sudden, from a compression zone, all of a sudden price actually ends up respecting a double top, for example, and now actually starts breaking maybe the first low in here, and then eventually can still push to the upside and starts manipulating in here. Now breaks new high, comes back into it straight away, and all of a sudden we start having this type of manipulation where you can actually break lows, we break highs, and we start to be a little bit indecised on which direction actually we are going to expect price to continue to move towards to. Okay, and this is the moment where maybe the buyers are actually starting to lose completely control of what's going on, and the sellers are starting to gain more control of what's going on in here, and eventually you can have finally the push to the downside, getting into this reversal phase. Okay, so again, in theory, price would go from a momentum to compression to manipulation to eventually reversal. It doesn't really happen like that every single time. Okay, price is unpredictable, as you know. However, just by being aware of these 4 different phases, we can already anticipate what to expect. For example, price is not going to go from a momentum to a reversal. It's going to be quite rare. Even if price just spikes and creates a high like that, usually price at least goes back to retest a double top, and maybe the manipulation phase actually is going to occur after that high is created around the double top. Usually what's going to happen is actually we have the momentum, and then we have either the compression or the manipulation in here before actually price reverses. The best scenario is actually when you have basically the momentum goes into compression, and then you have the manipulation, and then price eventually turns. Now let's take a look at the different types of opportunities that we actually have, either as a buyer or a seller in these 4 different phases. And don't forget that we are talking about all-time highs, which means that we don't have any information on the left side. There is no historical data there, so we are not taking anything of that in consideration, because you can actually use this information and to apply it for any other different market conditions. However, if you do that, now you need to actually pay attention to what's going on the left side, because even if you start seeing some kind of compression or a little bit of manipulation, if price still wants to go slightly higher, maybe that's not the moment of the reversal. Maybe price actually wants to go a little bit more to the upside before actually turning. Like, that's the power of having information on the left side. So let's take a look at the different market conditions in here. So we have the momentum phase, which is when you have strong price movement. In this particular case, I would just say that the sellers shouldn't even be involved trading in this particular moment. This is the moment that actually, as a counter trend trader, and I am not really a counter trend trader, so believe me when I mention this, because this is the moment where if you are trying to catch the top in this particular phase, you are going to actually have many losses in a row. And you want to avoid that. You don't want to be involved in this moment. You need to understand that price doesn't really go from momentum to reversal immediately. So stay away. Don't try to trade double tops in this particular moment. Stay away. Be patient. Go trade something else. Stop looking at this chart until at least you have a clear low being broken. Don't even try to aim for any sells in this moment in the market. If you are a buyer, this is for you. Whatever trading strategy you are using, this is the moment that you want to participate. Maybe you want to buy every single retracement towards the previous support resistance. Maybe you're going to find some level in here. As soon as price breaks a trend line, you get into the trade. Whatever strategy you are using, this is the moment that you want to trade. In terms of trade management, you can actually trail stops in this phase. Take advantage of the momentum. Don't cut your wins short in this particular moment. Take advantage of it. This is actually the reason I'm doing this video, is actually to understand that across these different 4 phases of price movement, we can and should manage our expectations differently. And this is the moment, again, as a buyer, you can be more aggressive and take advantage of this movement. In terms of exits, because we don't have anything on the left side. Like if you have historical data on the left side, maybe we'll be looking for the next level of resistance or supply level, and that's where we'll be looking for the target. This particular level, because we don't have any information, just try to rally the trade as much as possible, and as soon as you start getting a little bit of weakness or a little bit of a reversal sign, then you can close your trade. So that's for the momentum. Next, we are going to go into the compression. Now, in the compression, it's slightly different. It changes a little bit the expectation that we should have, especially in terms of targets for the buyers. And this is the moment that the sellers can start being involved. Because as I mentioned, this is the moment that we start having deep retracements and there are opportunities for both traders to be involved in here. So something to be aware of. If you are the buyer, at this point, you should be expecting price actually to have that deep retracement and start looking for longs closer to the demand zone. Don't expect straight away a small just retracement towards the previous level support resistance and to go long again. Maybe you should be a little bit more patient and actually wait for the deep retest into the demand zone, and after that you can look for a trade. This type of setup is actually quite good because it can provide you with a great risk reward. Just by placing the stop loss below that low, you can actually aim for price to move all the way there. So you are looking for a good risk reward. In terms of management, at this particular case, I'll be looking for targets at the highs, but since you are still in this bullish momentum, still creating the all-time highs, if you want to risk it a little bit and keep some part of the position open to see if price actually eventually gains momentum again, you can do that. But have the expectation that price may break the new high and may retest back again into your entry level, just like it has happening on these previous examples that I give. Maybe you don't really want to see how your unrealized profits came all the way back to potentially take you out at break even. So at this particular phase, I would start considering closing most of the trades at the retest of the previous high. Something that you shouldn't consider at this point is to try to trade the breakout. So when you are in the momentum phase, you can actually try to trade the breakout. Like as soon as price breaks the previous high, you can go and enjoy the momentum. In this particular case, I wouldn't recommend to do that because as you can see, this is the moment that the sellers are starting to jump into the market, and as soon as you break the highs, there is a high probability that that moment is going to be just a fake out and not a breakout, which means that price most likely is going to retrace. So trying to trade breakouts at this period most likely is going to end up in a loss more than a win. So this is something that you need to be aware of. In terms of the sellers, if you are looking to sell in this particular moment, I wouldn't recommend to trade double tops. So avoid to trade double tops because as you can see, this is the moment that you are still breaking new highs. So you don't really want to trade or you don't really want to sell at double top. Wait for that fake out to happen. Wait for some kind of trigger or confirmation that you are looking for, and then try to trade this move to downside. So as a seller in this particular case, be a little bit conservative, but you can already start participating in this move if you want. It's a little bit more experienced, so wait actually for that confirmation. Try to catch the first move down and don't try to catch the retest of the high. That would be my recommendation. Try to trade straight away the first move down. So you need to find the triggers that actually confirms that price is actually about to reverse. There are some, maybe that's for another video, but avoid to trade double tops at this point. So avoid to trade the retest towards to the double top, especially if price actually retested the demand zone, right? That's basically the video that I just did a few days ago. You can go and watch it where I explain what I'm looking for when trading double tops. In terms of targets for the seller, there is no need to even consider thinking about looking for any targets below the low. At this point, you are not looking for a big reversal. You are only looking for a retest back to the demand zone, and that's it. There's no point, even if price breaks, fantastic, it broke, then you can start positioning yourself for the next trade. For now, there is no point in trying to look for home runs at this point. Just be conservative, take your full target on the retest of the demand zone, and move on from there. Now, the manipulation phase. This is a moment that basically price is starting to trade in a range. It's no longer just creating new all-time highs constantly. It's actually starting to range and start to break lows and highs at the same time, creating a lot of confusion. This is the moment that the momentum traders start to get trapped into here because they see lows being broken, then they see highs being broken, and price starts to range in here. So we need to be aware that the fake outs can happen. So we are no longer just buying the demand zones. We actually can anticipate the fake out to occur. Sometimes what can happen, just as a tip, is that price moved to the upside. It retraced really close to the demand zone, but it didn't really touch it and then created a new high. And in this particular case, maybe the demand zone is somewhere in here. Underneath this low, maybe somewhere in here, there's another demand zone. Maybe price actually retested that demand zone a little bit in here. But then as price moves, now price actually goes to the previous demand zone that is still fresh, and then price continues to go to the upside. What many traders are going to see in this particular moment is that we did manage to break a new low, so they may start thinking about going short after that. But in this particular case, this was just a situation to go collect the orders from a fresh demand zone that this low didn't really react from it. So that doesn't really create a bearish sign in here. It's a sign that price is starting to break lows. That's perfect, but it's still not the sign that price is ready to completely reverse from here. And that's usually when you see price starting to break some lows in here, that usually tends to be the occasion. It's actually, there's a fresh demand zone that was left behind. Previous low didn't touch it, and now the new low goes there, and then it just comes back to the upside again. Now looking in terms of opportunities in here, I'll be trading the extremes. Sometimes what you can do is actually, or the best trade that can happen in this particular case is to wait for the fake out to happen in here, and as soon as price comes back into this level and you have the confirmation that maybe price broke some high in here, and you have the confirmation that maybe price wants to go back into this range. So basically, those will be the opportunities that you can trade in here, is trading basically from somewhere in here towards that level, and then somewhere in here after the fake out happens towards this level, until eventually we have a proper confirmation that price starts to break maybe 2 or 3 lows in a row, and then okay, at this point basically we actually start having a clear sign of the reversal in here. So that will be a little bit more of the trades opportunities that you have. In terms of exits, as I mentioned, just trade the range, so close the trade straight away in there. Don't buy the breakout setups in here, the same way that don't sell the breakout setups in this particular level, and be careful trading double tops as well. So it's quite similar at this particular case, either if you are a buyer, either if you are a seller, the type of opportunities, they should be the same in this particular moment. And then that takes us into the last one, which is the reversal, right? So the reversal, this is the moment that actually price finally confirms. Maybe you already had a few lows, at least 1 or 2 lows being broken before. Something that you can also pay attention to are those lows being broken on the approach towards the high. So even if you start having a little bit of that move, you break a low in there, and price comes back again, continues to go, maybe break another low in there. So all of a sudden we start having some lows being broken. That's a sign of weakness from price. And then eventually, yes, you may have maybe create a double top in there, fantastic. And then you can have finally the reversal somewhere from that level, and then maybe another confirmation of the low, and that's it. Now we have, and price can go from here. That will be a little bit of a PA of reversal, but in this particular case, the reversal, what I'm looking for is actually then price already confirms the proper break, and now it's literally in this phase in here. So it's already on the right side of the V, basically of the high. It's on this side in here, and now we are looking for sales. So for buyers at this point, for anyone that was still looking to buy at this particular case, I would step aside. This is now the moment that you need to be patient and move away. What you can see also in here is that it basically shifts in here the type of traders that we have. Before we had the buyer, and the buyer was trading with the trend. And now we have the buyer that's going to start being the reversal trader, because now we are going to wait for all those sales to come in, and eventually we are going to come back into the market when price drops for a while. And then we have the seller, which was the reversal trader, and now becomes the trend continuation trader that's actually going to trade this move to downside. One thing that's important to be aware, as you will see in the examples, is that when price actually is correcting and moving to the downside in these particular moments, it tends to be much more aggressive comparing when price is moving up. Like, so the moves to downside, they tend to be much more aggressive, they tend to be quicker. That's maybe why I have more tendency to look for sales as well. As a content trader, my natural is also to look for more sales than buys. It is what it is. By the way, let me know in the comments, what type of trader are you? Are you a trend continuation trader? Are you a reversal trader? And if you are a reversal trader, do you also have the tendency to look for more shorts than buys? Let me know in the comments. I'm really curious to know what kind of trader you are. And just to conclude, right? So in terms of sellers at this point is basically just rally the trend. You don't really need to close your trade straight away. One of the main difference now that price is moving downside is that we have data on the left side, right? Because price was moving to the upside. So we are going to be able to identify maybe where is the most clean demand zone on the higher time frame, or a clear level of support resistance that you need to be aware of, and that's maybe the target that you want to aim for. And as a buyer, maybe that's the level that you want to wait for price to get there before even thinking about jumping into a long position. Again, even if price is in a momentum period, you don't really want to go looking for a long straight away. What you want to do is actually wait for price to start showing some weakness, starting to lose momentum into a compression or eventually a manipulation phase, and that's the moment that you want to start looking for longs. And that's basically it in terms of these 4 different phases. By the way, let me know in the comments which one of these phases do you like to trade the most, and if you did learn anything new, let me know in the comments as well. I would like to know if this was valuable for you guys. Now let's take a look at the first trading opportunity that we have as soon as we break all-time highs. That's basically to see if you are going to have a breakout or a fake out situation after you taking the all-time highs. And this can be used for either the buyers or the sellers. So we have the high in here. All right, so I'm going to do some drawing now. So let's pretend that you have the all-time high in here, and now price was finally coming back into this level, and it's now retesting this all-time high. So when price is about to break this all-time high, or in reality any high, usually there's going to be a decision point in here that finally makes that move, and that decision point usually looks like a demand zone. So when price finally breaks this all-time high, something that we should be expecting from price is actually to retest one of these 2 levels. It's either to retest this previous level of support resistance in alignment with the all-time high, or eventually to retest the demand zone. And the expectation of that move, that's where you're going to be able to find the first trading opportunity. Now, be aware that this sometimes can vary in terms of the time frame that you're looking for. Maybe the setup sometimes happens really quickly, just in the 5 minutes time frame. Some other times the setup actually plays out in a 1 hour or 4 hour time frame, which is going to provide a much better opportunity. But this is more just of an intraday setup that you are going to be looking for, especially if you are looking for the reversal. And as a trend continuation trader, then you are looking for the retest of this level and eventually to look for the long again. But in terms of the reversal, so let's start to explain. If you are looking for the reversal setup, in this particular case, this is what you're going to be looking for. First of all, we already have a target, which is the retest of this level. So we can start from there. So we have a target, and the target is going to be the previous level of support resistance or the demand zone. What we're going to be looking for is actually for price to gain a little bit more momentum, to start showing that signs of compression or a little bit of manipulation. We are going to look for that, whatever confirmation you are going to be looking for in this particular case. Again, this can be on the 15 minutes, can be on 30 minutes, can be whatever time frame it is. We're going to be looking for that break in there, and whatever confirmation or setup that you're looking for to trade, that's going to be a little bit of the setup that you're looking for with the trade to aim towards this level in here. All right, so that will be definitely the first target that you're going to be looking for. It's either the retest of this previous level of support resistance or eventually the demand zone. So whatever you see it in there, that's going to be the first trade that you are going to be looking for. It's even better if price doesn't go there straight away, because the more price goes higher, the bigger then the reward can be when you actually get the reversal. So it's actually good that if you are patient enough, and if you actually let price evolve and continue to be a little bit more bullish, it's actually good because there's a high probability that price does want to go all the way in there, and that's going to create an even bigger risk reward for our setup. For example, like if you take a quick look in here at the Dow, so we have this previous all-time highs in here. So price basically creates a lot of momentum. First of all, there's a little bit of a test already in there. It creates a lot of momentum to the upside, and then when it turns, this will be basically the initial target that you'll be looking for. So all of a sudden you have all this to take advantage from in this particular case. So that's actually a really good setup that you can aim for. So coming back to this, so if you are now looking for longs and the trend continuation setup in here, so now you are just waiting for price to retest one of these two levels, and then are going to be looking for your PA, and at least the retest back closer to this level in here, you should be aiming for. You should be looking at least for a reaction closer to the double top setup in there. Price can eventually just resume the move to the upside, and it's perfect, but at least this kind of opportunity you should aim for. One detail in here, in terms of should we be expecting price to react from this previous level support resistance or the demand zone. So basically, when price is breaking this level in here, maybe on 1 hour time frame, we think that price hasn't really touched that level before. But when you check into the lower time frame, maybe price already went up, reacted from the level, and it pushed to the upside. So if price had already reacted a little bit from that level on the way up, as price is breaking the all-time high, retest and goes on the lower time frame, maybe that's one of the clues that we could anticipate. Either price reacts now, the new zone created a little bit above that level, or price now is actually ready to go to react to the demand zone somewhere in there. And then eventually when price turns, it can use now this level again, and it can now react from it and it go to the upside. So actually this level in here becomes a really good level to look for an entry on the retest of this previous level support resistance. When price comes back into here, retest that level, and you can look for a long somewhere in there. All right, let's now take a look at a few examples, starting with Bitcoin. Then we're going to take a look at gold, and we are going to finish with the indices, Nasdaq and the S&P. Before we actually start looking at the charts, we need to be aware that there are different factors that are affecting each one of these assets, as you know. For example, Bitcoin, there were two main catalysts this year, which was the ETF approval at the beginning of the year, and then we had the halving back in April that was also a big catalyst that everyone is anticipating. So somewhere around this level, it was the ETF approval, and somewhere around here, it was the halving on Bitcoin. Right. So with that in mind, we also need to pay attention to what we are expecting historically from Bitcoin. Like how often is Bitcoin breaking new all-time highs? When it breaks new all-time highs, does it usually has a deep retracement or some kind of retracement, or is just gaining expansion straight away and it moves to the upside? We can study each one of these assets a little bit individually, just to help us have a better idea of what to expect in these moments that we're about to break all-time highs. So now this is Bitcoin, and then I'm going to talk a little bit more about gold and the US indices. Now, what I'm going to look in here, right? So Bitcoin was one of those examples that we didn't create momentum after price broke all-time highs. Price just broke the all-time highs. It basically created a fake out, and it came back into the previous structure. The example that we're going to be looking at Bitcoin, since we didn't have the momentum, we are going to see if that setup that I just explained before, the first setup that we should be aiming for as soon as we have a break of a new all-time highs, if it happened. And in this particular case, it happened around this area, as you can see. In this line in here, this is basically where we had the previous all-time high. We had that first break in here, price just spikes up and spikes down straight away. What we are looking for in this specific setup, we want to see a little bit of momentum when price breaks the all-time high or the structure around the all-time high, okay? So just bear in mind as well, it's not just about breaking the all-time high. Maybe price can break slightly the new all-time high, but comes back into it, and all of a sudden there's a little bit of a range created around the all-time high. So this range is basically part of the all-time high, and we are looking for that first proper momentum, that separation between the all-time high or that structure and the next zone. And that happens around this area, as you can see. And this is basically the first trade that we could aim for. Basically, price gain momentum, it starts compressing quite a lot in here. We had our first break of a low, and somewhere around this level, depending on whatever strategy you decide to trade, that's maybe the first attempt that you can look for a sell with the target, as I mentioned, on the retest of this level. In this particular case, you need to be aware of this previous level support resistance, which is a little bit slightly higher at this point, comparing with just the previous all-time high, or then we have the demand zone. So as you can see, we had that moment as a sell opportunity, and then as a long opportunity as well. Price just bounced from it, and it continued to go higher. So it retested at least that high as well, or got really close to that level. So there you go. We had that opportunity on Bitcoin. Taking a look at gold now, right? What's going on with gold? Like, we know that gold, it's an important asset. It usually works as a safe haven asset. So gold is an asset that usually tends to perform quite well when you are in moments of uncertainty. Like, it works as a safe haven. So in this particular case, the war is not exactly in the most peaceful moment. We have the war in between Russia and Ukraine. We have the situation in the Middle East, and we are also in this inflationary period with high interest rates, which as a consequence worked as a catalyst for gold to just breaking new all-time highs in this last couple of years. So this is basically what we have at this point. And now let's take a look at how gold has been moving around this level. We had all this structure in here. I'm not going to really be looking at this spike. This was basically just a spike and price came back into it. It was almost impossible to trade whatever happened in this spike, but even if you want to just consider in terms of the strategy, there you go, there's a spike and back into this level, so that really worked as well. But the example that I'm going to be looking more is actually now this new break of the all-time high and comparing with what we had, for example, on Bitcoin. So this is actually a great example of what you should be expecting for price to create momentum. Basically, we want to see price just retesting the previous all-time high and resuming the move to the upside. We don't really want to see any more deep retest at this level. Otherwise, it starts showing some weakness, and we don't want to see that. We actually want to see momentum. So there was that first initial break of the high, there was a retracement, and now there is a new momentum being created in here, new break of new high, and that's actually a great opportunity to look for momentum. In terms of the setup itself that I just described, as you can see, it's still played out in here. This line in here is the previous high. Price breaks to the upside, it gains a little bit of momentum, and then it ends up reacting back into here. Right, we have a little bit of manipulation around these levels, but as you can see, if you just draw that level in there, price end up reacting. So there was maybe opportunity somewhere in here to actually look for that short. We get a little bit of momentum. We created a little bit of space in here, so we went upwards in order to create enough space to look for that retracement. So that setup, it also played out in there, and this is now a good example of those four phases that we just described in this video. Because what we have in here is basically we have that initial momentum of price breaking highs, retest just goes with it. So basically there's not exactly deep retracements, as you can see, until we actually start having a bit more of a deep retracement. So price in this case creates this high, comes all the way back to this low, basically respecting this demand zone. It tries to go higher again, doesn't manage to break the high. We start having a little bit of a first lows being broken in here. Price goes back once again, and now we're getting into this compression zone. Like basically price starts to break highs and retraces back into the level without gaining momentum. All right, so we now break new highs, and there you go. Price comes back all the way down, respects still this low, and now it breaks highs again, and again doesn't create momentum. It does the opposite. It comes back into the structure. So we are slowing down now on gold. It's a moment of weakness. Once again, we went from a big momentum to now starting to slow down into this compression zone. We may still need a proper break of a low before we actually have the confirmation that maybe price is ready to do a big reversal, but we are starting to slow down in here. Just considering in this 4 hours time frame, we might have that initial sell opportunity that we have after price breaks the previous all-time high, And after that, the seller shouldn't really be involved in any situation in here until price actually creates maybe this double top. And now as price now is starting to slow down, now it's the moment that you can start trading around this level. And when you take the highs, you can start participating. In terms of longs, yeah, this is the moment that maybe you can wait a little bit for the deep retracement, and then you can jump again into an opportunity to look for a long setup. So this is gold. It's a great example of what we just described in this particular case. Taking a look now at the US indices and looking at what factors are actually behind this big bullish momentum that you have on the indices for the last 1.5 years. It's mostly due to the AI and all the big tech, in particular Nvidia, that has been the main stock that has pushed the US indices, in particular Nasdaq and S&P, to create new all-times on a regular basis. And of course, we need to also pay attention to the macro data that is affecting the US economy. And GDP has been okay. Unemployment has been really good at historical lows at around 4.1%. Still, even though we have these high interest rates and we are going through this disinflationary period, and we are getting close to those 2% target that the Fed is looking for, which now is going to start a new cycle of rate cuts. But even just looking historically, we know that in general, the S&P, for example, generates around 10% return on a yearly basis. So this is something that you should be aware of, in the sense that when S&P or Nasdaq, for example, break all-time highs, we shouldn't be expecting just a small fake out and price to turn bearish again. No, we actually should expect US indices to gain momentum and eventually start breaking new all-time highs on a regular basis until there's maybe some macro factor that's going to work as a catalyst for any long-term bearish cycle. What we have in here is a good example as well of what we mentioned before. As you can see one more time, there is that setup somewhere in there. But something else that happens that I described already in this video is the moment when we have price basically going up, respecting slightly this previous level of support resistance, go up again. The next level that usually price goes to react from is the demand zone that actually managed to break this all-time high. So that was a beautiful reaction from there. After that, we create now this basically new structure around the all-time highs, being this now the new structure in there. Price goes up, starts compressing, as you can see, and now retests this level. Since then, we started a new cycle, right? Basically, price starts to create a lot of momentum. Once again, we broke new all-time highs after 1 or 2 months of this bearish move. Price respects the level, goes up again. Where does it react from afterwards? There you go, the demand zone. Create another bullish momentum. But if we actually look into the lower time frame, and this is why it's also important to check the lower time frame, and you pay attention to the way the candles were moving in here, we actually see a lot of compression. So basically price was moving up and down straight away. It's not visible when you're looking maybe at a 4-hour or daily candle. It just looks like a clean bullish candle. But on the lower time frame, you actually see that's a lot of wicks up and down, up and down. And that starts creating this compression zone. And eventually you do have this turn in here, right? This fake out, and we have that turn. Price starts to, again, gain momentum. It creates a little bit of that manipulation. So it went from momentum. There's a little bit of compression, as I mentioned before, on especially visible on the lower time frame, and then you have the fake out happening. Again, we also need to pay attention to the news and what kind of news can affect the market in this specific moment. And one of the most important news that we have been looking at for the last 2 years has been the CPI. And this is actually the catalyst that's happening here. It was with the CPI. And just as another tip to be aware of when you should be expecting a bigger reversal is when we actually have news that are positive based on what the market is looking at. In this particular case, the CPI data, it was actually minus 0.1% on a monthly basis. It was much lower than the initially it was expected, which was good because that could give more confidence for the Fed to start cutting rates in September. However, the way the market reacted to it was with a spike to the upside, and then it turned bearish. So it actually closed the day bearish. So it was good news for the market, and the market reacted negatively to it. When that happens, that's a big red flag in this situation, and you should start being concerned about that. It was exactly the opposite when we created the bottom back in October 2022. It was a CPI higher than expected, which in that moment it would mean as a negative news for the market. However, price spiked down and actually closed as positive. So it was a negative news that ended up with a strong daily bullish candle. And that was the bottom in the market back in October 2022. Now, carry on with this example. So we have that momentum with a little bit of compression over time frame. We get into this fake out. But as you can see, there isn't that much PA around this level, aside from the fake out. So when you don't have much compression or manipulation on the left side of the V, what I mean is on the left side of the high, we are going to usually then create that manipulation on the right side of it. which is exactly what happened in here. As you can see, price went down, it retraced back closer to the high, almost creating a double top in there, but it started to create this manipulation. All of a sudden, we have some highs, we start breaking some lows in there, we have a fake out, and price is within this range, creating liquidity above in there, and all of a sudden, we have to move down. In this particular moment, we already have the confirmation as well with this break in there. So basically, that low with the news, that was already a break of structure in here, confirming that actually price, or giving the clue that price actually wanted to go lower. This was something that we covered in the live streams that we do on a weekly basis, and also that we shared in the community, so everyone was aware of the potential bearish momentum that was about to start on the indices. After that, as you can see, it starts with a big momentum to the downside, and the sellers now are in control, and the buyers should be waiting until we get into the next important level, which was actually already around the structure where price is reacting right now. Looking also to the left side, you can see that. And one more point, just as I described, you can see the momentum that price creates when it's moving to downside. It's much quicker comparing when actually price is moving upwards. Now, to finalize, let's take a look at the S&P. And as you can see in here, S&P, opposite what happened with Nasdaq, S&P actually created a lot of manipulation and compression before the high was created, before the top was created. So on the left side of the V, and then on the right side, because all that move was already created in here, it was not really needed to create much manipulation. Right, so that's a good example of what I just described as well. In this particular case, we also had already this break in here. It's exactly on the same day. This was another news event. I think it was the PPI. There was a move to the downside and then the push to the upside, but that will actually manage to break this important structure in there. So after that, again, we just created this big momentum. So this is actually a great example of going with momentum in here. All right, starts compressing, go up, down, up, down, up, down, already start breaking lows, and then starts creating this double top, creates that liquidity in there. It has a good compression here as well, and all of a sudden we turn to the downside. And that's it, guys. I hope I managed to demonstrate on the charts a few examples of the 4 phases that I described before: the momentum phase, the compression, the manipulation, and reversal. And my challenge for you guys, it's for you to go and open up your charts and go find these examples that I just described, including the first setup opportunity that we have after we break new all-time highs. And then let me know in the comments the first time that you actually managed to get one of those trades. I'll be super happy to hear about it. Now, to conclude, let's just summarize the video. Main difference when you're trading at all-time highs: we don't have information on the left side, and that alone is already a big lack of information that we have. And in this case, we are only making decisions based on what you see in the moment, which can always be a little bit more tricky. Secondly, understand these 4 phases, and most importantly, understand what type of trader you are. Are you a trend continuation trader, or are you a reversal trader? Do you have more tendency to buy or to sell? Because, as I mentioned before, depending on which phase the market is, you need to be self-aware to know if this is the type of movement that you want to be participating or not. And if it's not, it's totally okay to stay patient and to just go find some other charts to trade. You don't need to just trade one pair or one asset. Go find something else. Set up your alerts, try to see when eventual price maybe breaks a low, and maybe that's the moment that you are going to start considering even looking for reversals. If you are a momentum trader, be aware of also those clues, because that can help you to manage your targets when you are trying to trade these momentum setups. So that's the most important. It's not just understanding the 4 different phases, but also try to understand what type of trader are you. Then in terms of the first trading opportunity that we have when you break new all-time highs, this is just an example of what we should be looking for as traders. We should be always trying to find new trading opportunities. And that's it, guys. Once again, thank you very much for watching this video. I know it was a long video, and if you stayed until the end, share this emoji with me so I know that you are committed and putting in the effort to become a consistent, profitable trader. Also, let me know in the comments what was the key takeaway that you got from this video and what type of trader are you. Don't forget to subscribe and like the video. I'm really trying to get 1000 subs. I would really appreciate if you could subscribe to the channel and also share the video with any one of your friends that is also interested in learning how to trade and to become a consistent, profitable trader. With that being said, thank you very much. Obrigado. See you next time.